When comparing FHA, which is Federal Housing Administration loans, and USDA, United States Department of Agriculture loans, both are government-backed loan options that help borrowers with limited funds for a down payment. However, there are key differences in eligibility, benefits, and restrictions. Hey there, I'm Christina Sparks, realtor with Real Broker, owner, House of Sparks. Let's dive right in with FHA loans. All right, FHA loans. Who is it for? Available to most borrowers with a lower credit score, as low as 580 down payment, 3.5% minimum, keyword minimum, with a credit score of 580 or more, 10% down for scores between 500 and 579. Mortgage insurance. This loan requires upfront and annual mortgage insurance, MIP, which stays for the life of the loan unless it's refinanced to a conventional loan. Debt to income ratio. This loan is more flexible on higher DTIs, typically up to 57%. Here's a video on DTIs. Property eligibility. No location restrictions, and it's available for homes in urban and suburban areas. Loan limits. Subject to FHA loan limits, which vary by county. So what are the pros of an FHA loan? 1, easier approval for borrowers with lower credit scores. 2, it's available in more locations. 3, higher DTI allowances. What are the cons of an FHA loan? It does require mortgage insurance for the life of the loan. You will pay mortgage insurance the entire life of the loan, unless you refinance it at some point into a conventional loan. Another con, higher upfront mortgage insurance premium. This is part of your down payment, what you have to bring to closing. Another con, higher down payment compared to USDA, but lower than most conventional loans. All right, let's go to USDA loans. Who is it for? Designed for low to moderate income borrowers looking to buy a home in eligible, keyword eligible, rural or suburban areas. Down payment, 0% down payment required. This is one of the few no money down loan options that are out there. Mortgage insurance requires a guarantee fee, similar to mortgage insurance, but often cheaper than the FHA mortgage insurance premium. Debt to income ratio. USDA loans have stricter debt to income limits, typically 41%, though there are exceptions that exist. Property eligibility. USDA loans must be in a USDA eligible rural area. So make sure you check a map. I'm going to put it in the link below, in the description box below. Income limits. Household income cannot exceed USDA's limits. Varies by county and household size. Loan limits. No set loan limit, but income restrictions indirectly limit borrowing power. Pros of a USDA loan: no down payment required. Another pro, low mortgage insurance costs compared to FHA. USDA loans also have favorable interest rates. Now, what's the catch? What's the cons with a USDA loan? The biggest con with a USDA loan is the location restrictions. It must be in a USDA eligible rural or suburban area. Again, down below is a map where you can check for yourself. Another con, income limits apply. If you make too much money, you won't be able to qualify for a USDA loan. Another con, stricter debt to income requirements than FHA. So, which loan is right for you? If you need a low down payment option and you don't qualify for USDA, FHA loan. If you have a lower income and want to buy in a rural, suburban area with 0% down, USDA loan. If you have a higher DTI or need flexibility on location, FHA loan. If you want to avoid a lifetime of mortgage insurance, USDA loan. Cheaper insurance overall. The best thing you can do is talk to a mortgage broker in your area. See if you qualify for a USDA and if it matches your needs. It's an amazing program, but pretty difficult to qualify for because of the income and debt thresholds. FHA is also a wonderful loan program too. Reach out to a mortgage lender and see which program is best for you, which one you can qualify for. I have my recommended lenders listed down below in the description box. Have questions? Feel free to reach out. I'm happy to help any way I can. Have a great day.